Hey guys, it's Sharon from Digital Nomad Quest, and today we have Shiv Gettu, and we're going to talk about the furnished rental business. So it's basically another path with real estate investment that I feel like requires less capital and allows you to cash flow quicker. So I'm very curious about it, and I wanted to learn more. So thanks for being here today, Shiv.
Sure.
And maybe can you tell us about yourself to the viewers out there?
My name is Shiv Gettu, and I run a corporate furnished rentals business where we do actually corporate rentals and vacation rentals. We started about 6 months ago, and I still work a full-time job, but we have currently 12 properties under management right now.
Awesome. So you do this with a partner right now, right?
Yeah, I do this with a partner. I'm a huge believer in having partners. I think obviously more people is more productive, but I think there's also the element of like emotional, right? When you're going and starting a company, when you've never done anything like this before, there's a lot of value in having someone where you can bounce off ideas with, fail together, succeed together. And yeah, so I definitely recommend having a partner if you're going to start a business.
Cool. So we met, last year, end of last year?
Yeah, we met right when I first thought about real estate. I guess that was last July. We met at that meetup. That was the first meetup I ever went. And I just remember talking to you, and I've told you this before, but I was like, oh my God, Sharon traveled the world. She quit her job, built this passive income stream that just gave her the possibility to do all this. I was so amazed, and yeah.
Yeah, but it's so crazy that you've basically accomplished so much in such a short time. It's only been a few months, right? Basically. Less than a year.
Less than a year, yeah.
Yeah, it's amazing. So maybe you can tell us more about the furnished rental business. So maybe people out there probably don't know what that entails. So maybe you can say the brief gist of it in the beginning. So.
Sure. So furnished rentals, there's a few ways you can look at it, right? But the idea is you have an apartment or a home, and the current way that people do real estate in terms of rentals is you rent out an unfurnished apartment or home for maybe a year-long lease or more, right? And you're getting typically market rent. The furnished rental arbitrage business is when you are either renting a property out for market rate, unfurnished, and you pivot the asset base from being an unfurnished long-term rental to a furnished short-term or mid-term rental. The idea being if you're paying X in market rent for a long-term unfurnished lease, you should expect anywhere, greater than X. Obviously, the multiple depends on the market, but you should expect more than X. And that's your margin, that's your profit, it's cash flow, kind of.
So do you rent places for a year or something like that and then rent it out on Airbnb?
Yeah, exactly. That's a way to think about it. So we have a few different marketing channels that we leverage, Airbnb, there's VRBO, bookings.com, Expedia, HomeAway, all of this fun stuff. But that is the idea. So there's a few ways to do it. So I think rental arbitrage, that word, and furnished rental arbitrage means when you do the master lease, you sign a master lease, and then you basically are guaranteeing the owner rent, and you're hoping to make a margin on top of that. The other way is when you take a management fee. In the first way, the owner is just getting market rent, but he's getting guaranteed rent. The second way is you're allowing the owner or the landlord to capitalize on the opportunity of vacation and corporate rentals. So let's say if your rent was $3,000 market rent, you could hope for maybe some multiple of that. And after you take your management fee, the goal would be to provide the landlord with more than $3,000. And you make money, he makes money, everyone's happy.
Got it. That's awesome. Maybe you can walk us through the first experience you had with the furnished rentals. So maybe your first project.
Yeah, I'm smiling so much because it's a really funny story.
Oh, okay.
So I we started, basically I started reaching out to everyone I knew, right? Everyone talks about the power of network, that your network equals your net worth equals your network, all whatever way you're supposed to say it. Yeah. But I started reaching out to whoever I knew, and I came across one of my dad's friends who was really into real estate, has multiple properties all across the Bay Area, and I started trying to build a relationship with him and pitching this idea about furnished rentals, and I'd like to take one of your units and sign a master lease and guarantee you rent. And he was like, okay, well, you can try it and see how it goes. So I was like, okay, cool. I had no idea what properties he owned, whether it's Class A, Class B, in the slums and the, slumlord type properties. So it turns out that his properties are a little bit not as nice.
Okay.
I mean, they're more if people who know real estate, there's A plus properties or A class A properties, which is like new construction, really nice. Then there's like D properties, which is, you know, very rundown, bad neighborhood. His is like a B minus.
Okay.
But
Where were they?
in Redwood City.
Oh, okay.
Yeah. So the idea was like, okay, well, let's go to the building, sign a lease, and let's get the furniture in and get started, right? So this was my first unit. I was like, okay, I'm really excited. Like, went to the apartment, you know, wasn't that impressed with the way it looked, and I was like, okay, whatever, like, let's still do this. And I talked to the property manager, and we got a lease out, and we signed the lease and everything like that. And I was like, okay, well, you know, maybe I should just get the experience of like staying in the apartment for a night and seeing how it was.
Oh,
and
wow.
and I guess I didn't plan it because I didn't have any blankets or pillows or anything, so I just ended up sleeping on the ground. But I guess that's besides the point. So I stayed in the apartment, and then I started noticing, I was like, wait, there's quite a few bugs here.
Oh, no.
I started noticing like there are cockroaches in the bathroom. I opened the cabinets, there are like bugs all around. I'm like, there's no way we can take this and put it on hospitality websites and brand ourselves as a hospitality company. And it was a disaster. I was so excited. And then I stayed in that apartment. I was like, oh my God, our whole idea it can't go anywhere, right? And obviously that was overblown, but that was my first experience.
Oh, okay. So did it cash flow like it ended
Oh,
up
so we
okay?
didn't end up doing the lease. I told the property manager, I was like, you know, there are bugs in this unit. There's no way we can go through with this. And we never ended up signing the lease because I was like, there's no way this could actually work.
Okay.
And I didn't want to provide a product that had bugs to, you know, it's just not quite ideal.
So when did you like get when that succeeded?
So my actual first unit, I think, was like a month after that. So we rented a place in Pleasanton. It was in an apartment complex, a one bedroom, one bath. I think the numbers were we were paying around $21.95 for rent.
Okay. How did you find it?
So we found it through this guy as well.
Okay.
So he owned something there. So I continued building that relationship with him.
Okay.
And found it through that and rented it out. And we were like, okay, well, like now we have an apartment and we have no idea what to put in it. Because I'm not into, I did engineering. My partner, Kendrick, did engineering. So we're not particularly the design heavy people.
Yeah.
Like for, you know, interior design and all that artsy stuff. We were like, okay, well, what do we do now? And at the same time, Kendrick got connected with someone called Al Williamson, who, you know, some of you may know. He kind of pioneered in this small Bigger Pockets type community, pioneered this whole corporate rental, furnished rental business. He got connected with him, and we got connected to this community of people who are doing similar things. And that was a huge help in the early days, right? Because you have all these questions like, what furniture do I put in? Where do I buy it? Do I assemble it? You know, all these things. So we started asking people tons of questions and basically ended up using like Amazon. Some of it we were like, okay, we need to save money. So we like went on Craigslist and bought like used couches, and we realized that wasn't the way to scale because it's so manual and you're picking up things and all that. So ended up somehow putting together a decently furnished apartment, and yeah, we still have it and it's doing pretty well. I think we learned that area might not be the best, and that's where like in actual real estate, location really matters. But even in this business, like location really matters.
Mm-hmm. Can you talk a bit about the numbers if you're okay
Sure,
with it?
sure. It really varies all across, right? So in the Pleasanton property, I would say annualized monthly cash flow, we're probably at maybe $600 a month. You know, obviously in this industry, it's very seasonal, right? So winters are typically slower, summers are typically much more busy. Mm-hmm. And that I would say that could be average for that area, but there's some areas where, for example, in Redwood City, we're almost doubling market rent. So we're paying X amount, we're getting 2X.
Wow.
And that's in the summer, but again, it just really depends on the market.
Yeah. How many properties do you guys have now?
We have 12. Yeah.
Wow. Okay.
12,
That's
yeah.
amazing.
So
do you find it pretty passive, or do you find it still like a decent amount of work?
no, so right now it's very passive, right? Like the only thing that's active is us working on the business. So there are two outlooks, right? So there's working in the business versus working on the business. Working in the business means you're involved in the operations, right? If you weren't part of the business, then it wouldn't be able to run. That means you're required to work in it for it to sustain itself.
Yeah.
When you're talking about working on the business, it's okay, you've built this engine that can grow on its own. But when you're working on it, you're like, how can I make this engine bigger and more powerful?
Yeah.
So now we've segued ourselves from working in the business, so no longer really doing much of the operational work. I mean, quantitatively, we're probably spending like 2 hours a week on the operations of the business. And most of our time is now like how can we expand, grow, scale, markets to hit, etc.
So when you say markets to hit, are you thinking of expanding past Bay Area or staying within Bay Area?
Yeah, no, that's a really good question. We actually just met with an investor earlier this morning, and we're looking to definitely get out of the Bay Area. So we're trying to be pretty ambitious with this. We actually are negotiating right now a deal in Reno. So we're going to take 5 units in the building, and hopefully, depending on how the relationship goes, that they eventually may want to give us the entire building, which is 50 units. We're also looking at other markets in Texas, and yeah, definitely expanding and definitely continuing it till it becomes something that we don't want to do, or we think we're at a stable rate.
Wow, that's pretty awesome. Maybe we can talk about like the initial capital needed. So for a complete beginner, right? So you basically have to pay the year lease and like monthly, and then the furniture and stuff like that. Like what kind of costs are there?
Sure. Yeah. So there's a few different costs depending on the model, right? So if you're master leasing, which means you're signing a lease with the landlord, you're guaranteeing them rent, and you're responsible for funding all the furniture costs, then there's more of an upfront cost, right? So the split between all our units, we have 12 units totally, and 10 of them are master leasing, which means we bought all the furniture. 2 of them are property management, which means we've negotiated with the landlord for them to buy the furniture. We just take a management fee. So we're essentially zero capital investing and making money from day one, basically, off the management fee. So for master leasing, it really depends on the quality of furniture you want. We typically spend around $5,000 to $7,000 to furnish a 2-bedroom. Then there's the security deposit, which is dependent on the property. And what else is there? There's labor right now. So initially we were doing everything ourselves, like drinking tons of Red Bull, staying up all night, like assembling all these IKEA beds. And we realized like that's not the way to scale. So now we have employees that are helping us with building and assembling all the units. But if you're looking to do a completely like DIY solution, if you were to take a property in the Bay Area, it could be, $5,000 to $7,000 for furniture for a 2-bedroom, plus depending on what the rent is, maybe 1 month security deposit, $2,500. So that's $7,500 to $9,500 initial capital, probably for 1 unit.
Okay.
Yeah, but then there's the other option is like, okay, well you just pitch to landlords and say like, listen, I can manage your property, and instead of you getting X dollars for rent, I can get you 1.3x, and the only thing you need to do is buy the furniture and put it up front. I'll do all the management for you. You just sit back, collect rent, and you get more rent than you would if you were to do a long-term lease.
What would you recommend for like the steps for a complete beginner then?
It depends on your risk tolerance. So there are 2 things, right? You could have if you have a higher risk tolerance and you're more confident, I would say go with master leasing, because the advantages there is you're keeping all the upside, right? Yeah. You're paying the rent, the landlord market rent, and you're keeping everything that's over and above that. Yeah. If you're a little bit more conservative, I would go with the property management, because you don't have any financial capital invested, and you are going to take less of the upside, but it's almost no risk.
So with the second route, you're mainly managing with like the Airbnb listings and stuff?
Yeah, so you're still, it depends. It's really how you structure it, but you can say, hey, listen, like you take responsibility of furnishing the place and doing whatever you want, or maybe it's already furnished, and I'll manage the digital layer, right? So I'll make sure your cleaners, or maybe even physical layer in the sense of like cleaning, right? I'll make sure the unit's being continuously turned. I'll make sure that it's being marketed on the right websites. I'll make sure that your occupancy rate is high for the right prices, using all these different software tools, etc.
So you said when you started, it was with someone where you were like, oh, we'll handle like the digital layer, and you guys furnished it too, right?
Yeah, so we were I guess we lead on more of the risky side. So we did a master lease.
Oh,
so
you did?
we bought all the furniture and everything, yeah.
Okay, interesting. So it might be a good route to even like for newbies to just start, because it's like cheaper than buying a whole property. Like,
exactly, yeah. That was our idea. It was like, well, like I just graduated from college. Do I really feel comfortable, like, not that I have that much of my own money, but do I feel comfortable putting a lot of my own money and raising money from family and friends in something that like I have no idea how it's going to do? And not only that, like after all expenses, I'm only expecting a couple $100 a month in cash flow, right? And I think as a younger person, I don't think I'm going to speak for everyone, but I think a lot of people do care about cash, right? Cash flow is king, right? So if you can build an engine that's providing this cash, then you also have ultimate time value, right? You can unlock yourself from your job and use all that extra time to maybe actually go and learn all the necessary things you need to do about buying property.
Yeah. What would be like the worst case scenario if like you did this and you invested that money? Would it be like no one rents it and you have to pay the whole year of? Like,
I guess the absolute worst, if you were to take this on a spectrum, right? Like if you were to go to like negative infinity, the worst possible case. The worst possible case would be you sign a lease, you furnish it, and you just can't get anyone in there, right? That's the worst possible case. I would say one level above that, that's way more realistic, is you sign a lease, you pay for the furniture, you can't get any short-term rental people to rent it, or you can't get any corporate rental person to rent it. So then you just find a long-term tenant and you just get market rent, or maybe you ask for $100 above market because it's a furnished rental, right? Like, at the end of the day,
subleasing, basically?
Yes, because so when you're going into this with the landlord, you're getting permission to sublease, right? That's the whole deal. You're making sure that you're signing a lease that allows you to sublease. You have to be very upfront with that, let the landlord know your business model, and say, put it in the lease saying like, I get permission to sublease. So if that's the case, if you can't figure out a way to do short-term or midterm rental, corporate 30-day plus rentals, you can always get a long-term lease.
Okay, got it.
Long-term, someone to rent a long-term, yeah.
Okay, interesting. So when you research these neighborhoods, what are things that you look for to make sure it will like profit on Airbnb and sites like that?
Yeah, so there's the tool called AirDNA. It's essentially a data analytics tool that helps you go from a granular level of like different markets, right? So how is some of the markets we operate in, like Redwood City, and you have to be very careful about ordinances. So different cities, especially in the Bay Area, have different ordinances, different short-term rental laws or regulations. In Redwood City, you're only allowed to do 30-day plus, right? So it's very important to make sure you're compliant with these regulations. So we, in Redwood City, do strictly 30-day plus. In some markets where it's not defined yet, or it's legal, like Pacifica or any other market where it's legal, we typically try to do short-term rentals where it's more profitable. And so it really depends on regulations and stuff. Sorry, I forgot your question.
It was mainly the like researching if it will profit.
Yeah, sorry. So there's this tool called AirDNA. You can use that to figure out what the market climate is, right? So whether, some areas you can literally search from the market. So let's say you live in, Arizona, and you want to see if Phoenix is a good market for short-term rentals. You can go and put the city, and it'll give you all information like what is the rental demand, what is the regulatory risk, what is the seasonality risk, how much revenue you should expect, what is the typical occupancy. And you can break it down in terms of like, what are all these metrics for a one bedroom, what are all these metrics for a studio, what are all these metrics for a two bedroom, etc. So there's a lot of data out there. You can just leverage the data and see if it works. We found that it's more or less accurate, and it's definitely way safer than just being like, okay, I live in, Kentucky, I'm going to just open up a short-term rental there with no knowledge.
You just invested in that tool before you like...
Yeah, exactly. And it's it's a software tool. So you can just subscribe, you just buy the subscription, and it costs, I think, maybe $30 a month, depending on the market. Yeah, okay. So you just pay $30 and you can look at it and analyze the data and understand, and you'll feel a lot more comfortable that way. Yeah.
Cool. I think my friend's friend owns
uses that. Really?
Owns it. Yeah.
Scott.
Yeah.
Oh, really? Wow.
Like his good friend too. Yeah.
Yeah.
Which is crazy.
He should pay me to. I'm marketing their site.
I was actually going to interview him like a long time ago. I'll probably.
Yeah, you should. Yeah. No, it's a great website. It's obviously very helpful for investors.
Yeah. Okay. Awesome. So when you do your Airbnb listings, do you have any like tips on how to do them and how to market your listing?
Great question. Yeah. So. Yes. So there's this book called Optimize Your Airbnb. I forgot who the author is, but it was started by an ex-Airbnb employee, actually. Really smart guy, or very clear. He communicates his information very articulately. So that book, it's called Optimize Your Airbnb. It goes into detail of how to make sure that your Airbnb listing is optimized to its full capability in terms of search rankings, right? Because the way your property gets the most eyeballs is how does it compare to listings when someone is looking for a similar property in that location, right? So if your property is more towards the top of the search, you're gonna get more demand, you're gonna be able to leverage higher prices, you're gonna have higher occupancy, etc. So that book will really help you understand what are the criteria and factors that affect that SEO.
Okay. Do you like have certain things you need to do to become a super host or whatever?
Maybe I can just talk about a few of the factors. So Airbnb has something called Instant Book or Request a Book. So Instant Book means if a guest goes on Airbnb and they find your property, they can just instantly book it. Just like you go on a hotel website, you can just book the place. That helps. You have to almost think about Airbnb, right? Like put yourself in Airbnb's position and think about what they want to sell to their guests, right? Mm-hmm. They want to make sure their guests have good products, right? So what goes into a good product, right? The guest should be able to look at a property and be like, okay, I want to book this right now. They shouldn't have to request a book, all of that, right? So that'll help your ranking. Obviously, ratings and reviews help, right? They want to push the listings that are actually liked by guests. Obviously, price helps, right? They want to make sure that guests are getting a good deal for a bang for their buck, because you have to keep in mind that Airbnb is competing with hotels, right? So they're essentially trying to get all these vacation corporate travelers to move from renting in hotels, staying in hotels, to staying in Airbnbs. So pricing is important. Pictures obviously are very important. Do not take pictures yourself on your iPhone. Get a professional photographer, and just making sure that your listing has a lot of marketing material. It really stands out. Yeah, you really have to make sure that like you're paying attention to what Airbnb wants to sell to their guests. And if you think about it logically, it's price, it's all these different factors I mentioned.
Awesome. What would you say is like the hardest part about this business model?
I think unique to this business model, it's almost taking action. I think that's not quite unique to the business model, obviously, because taking action is a problem for anyone. But I think it's very important and core to this business model, because the problem I've found, especially with me in the beginning, is you can get stuck on this train of constant research. And constant learning and constant alternative ways of procrastination, right? Learning is great. Don't get me wrong. I think reading and educating yourself is great, but I think it becomes a problem when you're getting satisfaction from learning and feeling like you're taking action because you're reading all day, every day for weeks on end, but you're actually not taking tangible next steps, right? So the hardest thing, quite simply, would be to take action, to go from like 0 to 1.
Oh, interesting.
Really.
Yeah. So you haven't had like too many obstacles so far?
No, we have.
Okay.
Yeah, we have. I think, we have had obstacles. It's raising money for sure, right? Because you have to be able to have enough investors who are willing to buy into this idea to help you sponsor the furniture cost. I guess we haven't had as many difficulties. Maybe you're right. It's not too difficult as long as you have the right mindset. I think, okay, here's how I can define it. If you're not a systems thinker, you're going to have a very hard time, right? Because when we're essentially running hospitality company, right? So there's so many different moving parts, orchestrating the cleaners, making sure that unit is ready for the next guest, figuring out what the pricing is, all of that. You need to basically build a strong system that allows you to step out of your business and let the business run on its own.
Yeah, that makes sense. How long did it take from, you're talking about like the research and the reading and stuff, like how long did it take from starting that to like actually getting your first property?
I think about a month.
Oh, that's not even long.
I would say about a month. I think the minute we got this idea.
Was it from Janae?
It was from this article by Paul Moore on Bigger Pockets that spoke about this other guy, Jay Martin, who's now a friend of ours. Saying how to generate $10,000 a month without owning any real estate and without quitting your job.
Okay.
So I found this ridiculous. So we read this article and we were kind of just blown away, and we were like, well, if they can do it, if this guy can do it, and keep in mind Jay Martin has this business, he generates all this money, he travels the world, he's not involved in any way in his business. It runs on its own. If he can do it and travel the world and not even be involved, like why can't we?
Yeah. What did you study to like get to that point? That first property? Yeah,
I just went online and just did a lot of research about Airbnb, rental arbitrage. There's a few YouTube channels, I don't quite remember the names, but if you just go on Google and just search and learn as much as you can. I think the most important thing though is, to my point earlier, it's really good to learn. And I think the best way to do this is time box yourself. So say, I'm gonna take the next 4 weeks to learn as much as I can. And after that point, I have to take action. I have to take tangible next steps. Because if you don't time box yourself, you're going to get stuck in that trap of constantly learning,
Yeah.
right? There's a really good law that I try to live by. It's called Parkinson's Law. And it states that work expands with the amount of time that is allotted, right? So if you have an essay that you need to write and you have 1 week to do it, you're going to take 1 week to do it.
Yeah.
If you have 1 day to do it, you're going to take 1 day to do it, right? So if you can time box yourself, and whatever it is, it could be 1 week, it could be 2 weeks, it could be 2 months. But make sure that you're holding high integrity to that time box. And you're saying, I'm going to learn, I'm going to use this time to learn, but after that, I have to take action.
Interesting.
Yeah.
So, yeah, I feel like I'm even more interested in doing this now. So, all right, for me, if I were to do like this model, should I partner with someone and should I like read certain things and then, you know, where should I don't know, maybe you can give some advice.
Yeah, I would partner with someone for sure. If you're not ready to, we're both working full-time jobs. We haven't made that step yet, but if you still want to work a full-time job, I would definitely partner with someone. It's kind of to the reasons I spoke about earlier. You want to bounce off ideas with people. You want to make sure that you have someone to turn to when times get tough. You have someone to turn to when you want to celebrate, right?
Yeah, what was the time investment like in the beginning?
It was a lot.
Really? Okay.
It was a lot, yeah. And that's partly because we made it a lot, right? We were doing everything ourselves. We were furnishing. We weren't quite cleaning the apartments ourselves, but we were furnishing, we were marketing, we were responding to guest communications, we were doing everything ourselves.
Sure, yeah.
Right? And when you do everything yourselves, you're not valuing your time as much as you could. And regardless of what business you do, you're going to put in a lot of hours, right? So it's funny to think like we were at a way lower growth rate than we were at the beginning, but we were spending way more time on the actual business versus now where we don't really spend any time and it's running on its own.
Yeah.
And the output now is way greater than the output before, right? So it's an important thing to note that like your business can run without you.
Yeah.
And as long as you're strategic and systematic enough, then you can definitely make it work.
Interesting. And you were saying like with one of the challenges was getting investors. So are you definitely going to like have other people invest it rather than put in your own money?
So we reinvest. I haven't taken a dollar out of the business yet, so we're rolling over everything we make into new units.
Okay.
We are going to put some of our own money in, but I think the goal would be if we were to scale fast enough, you know, which could mean maybe a couple hundred units by the end of 2020.
Wow.
It's one of the goals
insane.
we're trying to throw
Okay.
out. So if we want to scale that fast, we need to make sure that like we have enough capital that can support that.
Yeah. Do you find like the market's saturated, or do you think it's still available for new people to come in?
That's a good question. I think there's still a lot of market opportunity because the demand, and this is kind of going to go into the trends of society, right? We're seeing that a lot more millennials are wanting to adopt this transient way of living, right? They want to be able to move to one city and say, hey, I don't like it anymore. I'm just going to spend 2 months here. I want to move somewhere else, right? And that also ties into digital nomad, people being just more versatile in their movement, agile, able to stay here for a month, move here for a month. There's about a 6%, I think, compound annual growth rate for furnished rentals. There's a constant increase in demand for furnished rentals, and that increase in demand is currently outweighed by the increase in supply. For furnished rentals, which means that it's a chase, but if the supply increases, then they're going to go at the same rate. But I to answer your question, yeah, I think there's still market opportunity.
Awesome.
Yeah.
So what are your future goals with everything? I know you said you wanted to scale it to like 200 units by end of 2020. Are there other things you want to do? I know like before you're interested in buy and hold and stuff. Is that something you would still be interested in later?
Yeah, that's a really good question. A mentor of mine gave me this advice. I think the last time I spoke to him, he said, don't get too excited about too many different things and try to stay focused on one thing. And I think when you're just starting out, you haven't fully learned that, right? So you're like, okay, like this sounds good. Oh, buy and hold sounds really good. Oh, flipping sounds good.
Yeah.
Oh, I don't know, like storage units sound good. Mobile home parks sound good, right? And everything is good. Everything is truly good, right? But you have to make sure that you develop a craft in a particular niche.
Yeah.
So you have that domain expertise and that skill capital to leverage and use to actually grow in a rate that you can support. So I think to answer your question, like I think we're going to stick to this. Right now our goal is maybe, it sounds ambitious, but maybe a couple hundred units by the end of 2020, and stay in this and keep it as organic as possible. Try to maybe raise more debt financing than equity and own a lot of the business still, and then maybe take all that money that we're generating and then maybe venture out into like putting that money in a buy and hold.
Yeah, that's
or
awesome.
something. Like I mean that to say like it's okay to do new things, but I think you shouldn't do many new things at once.
Yeah.
I think you should really stay focused on something for a few years, a decade, and then if you want, move and really learn something, but not multiple things at the same time.
Yeah, you gotta like master one. Definitely.
Yeah, exactly. Otherwise, you're an inch deep and a mile wide.
Yeah. Well, thanks, Shiv, for like being on this episode.
Yeah.
It's given me a lot to think about. I learned a lot from it, so thank you so much.
Yeah, no problem.
Yeah, so where can people find you online?
You can reach me so my email is shiv.gettu07@gmail.com. And you can find me on Facebook, shiv.gettu or Shiv Gettu. That's SHIV. It's my first name, GETTU. And
do you have a company website or something like that?
we actually don't yet.
Okay.
Surprisingly, yeah, we don't have a company website. We do, but it's not exactly. We're in the process of revamping it.
Okay.
But yeah, you can find me on Facebook, Instagram. I think my Instagram is GETTU, so get to my level, my last
Nice.
name. You can find me there.
And your company's name is
Astro.
Astro.
Yeah,
Okay,
Astro.
so look out for that when the website is up. So awesome. Thanks so much, Shiv.
Yeah, no problem, Shane.